While the nation focuses on the presidential race, markets are keeping a close eye on the economy with a major week for economic data ahead that culminates Friday with a critical jobs report. The first data out of the box was mildly positive today. Car sales and construction spending were strong, and the downturn in manufacturing, well, it didn't get worse. The ISM Manufacturing Index actually beat Wall Street expectations, rose to its highest level in 5 months, and is now just barely below the expansion line. That is, it's now only contracting a little bit. But the big data is yet to come. Despite fears that the U.S. economy is softening and that weak overseas growth will drag down the U.S. economy, Wall Street is still banking on a strong February jobs report. The consensus is for 200,000 jobs. That's up from 151,000 in January. The unemployment rate expected to remain steady at 4.9%. The optimism was buoyed by the Paychex Small Business Index today.
The good news here is that we are seeing it 2 months in a row, an increase in the job growth rate in small businesses under 50 employees, and it's across the country. We were seeing a little under 2% wage growth for many months. Now we're seeing it closer to 3%. So we definitely have seen the wage per hour go up pretty strongly here in the last couple of months.
The concern is that job cuts announced during the recent poor earnings season from the big companies lie in front of the economies and could dampen job growth in the months ahead. Recent market volatility and growth concerns led New York Fed President Bill Dudley to suggest he is not in a rate hiking mood. Dudley said in China, quote, "The balance of risk to my growth and inflation outlooks may be starting to tilt slightly to the downside." Yet today's market rally, which began with Dudley's downbeat comments, accelerated with the better economic news. That could suggest the market is more interested in better growth rather than more Fed stimulus. For Nightly Business Report, I'm Steve Liesman.